Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, who is a senior investment manager at Gower Financial Services. We're going to take a look at what's been happening in the global markets in the third quarter of 2023. And a reminder, all opinions are personal and no investment advice is being given. As ever, good to see you.
Hi, Tony. Good to see you too.
What's happened to the year? It's flying by, isn't it?
It is. It feels like another long year.
Well, can we start off, Toby, with a bit of a review on three major global markets, the US, the UK and Japan? Lots of ups and downs.
Yes, the last quarter has been relatively flat because the pound has been weak. It's made other markets look good in sterling terms. The FTSE's been one of the better performers because they've got exposure to big energy firms, which are, of course, the sort of devil incarnate nowadays, but they're doing very well. Japan they had to announce by the stock exchange that they're trying to reform the companies to make them a bit more shareholder friendly. So I had an initial bounce of about 6% at one stage, which has come off a little. And America's been down because higher bond yields is bad for technology shares. So that struggled over the last few months. So all in all, it's pretty flat. But that's been the story of the year up until now, I might add.
And of course, that's something that every investment manager has had to contend with. There's no magic wand.
Not really, especially after people are classically making double-digit losses over the last over 2022, and they're hoping that there's going to be some kind of recovery this year to offset it. So no, it's been a tough one, but I am actually very positive. We'll chat about that later if you like.
Yeah, well, that'll be good. As far as Japan's concerned, it's still not anywhere near the magic 35,000 that it hit in the 1980s.
Not yet. It's getting there, and there's a lot more attention. I've noticed that we've had a lot more Japanese fund managers visiting Guernsey, for example, and it really has got a lot more attention with this idea that they're kind of seen as value stocks, and they're like a conglomeration of lots of different businesses which have accumulated over the years. And now the emphasis is trying to sort of debundle these and concentrate on your core business. And it's looking pretty good actually for Japan.
Because I mean, if you look at Hitachi, for example, they're into all sorts of things, aren't they? From nuclear power stations down to, very basic stuff we might use in the home.
Yeah, I think private equity has been given the green light to really to help shake up some of these firms, which have just become a whole sort of heap of different companies that need to be split off and made more efficient. I'm not often a big fan of private equity, but this might be a case where it does help concentrate the mind a little more.
Yeah, because if you've got a conglomerate with all sorts of different trading operations, very difficult for the board, I should imagine, to really keep on top of it.
Yeah, they're better off being merging with someone else who does the same thing, and it's better all around, really is.
Now, market reactions. When the war in Ukraine started, the old stock market went all over the place. In the last few days, we've seen this question of Hamas, the attack on Israel, and the FTSE's actually gone up by around about 1.5%. Got any theories on this one?
Yeah, it's relatively straightforward. Up until now, the stock markets and the bond markets particularly have been crushed by the threat of ever higher interest rates. And all markets need is some indication that they're going to stop rising. Doesn't mean they have to be cut. Just want to see an end to rate rises. So what's happened here with the events in Israel is that it's made investors think, well, maybe now rates are going to stop going up. And then it's a green light for equities to appreciate. And as always, as you know, so Wall Street's full of sociopaths, and what's bad news for everyone else is good news for asset prices. And it's all based really on long-term interest rates and bond yields. We've seen the US bond lose about half its value in the last 3 years. So it's one of the worst and longest stretches in 200 years that we've seen.
Toby, sorry to interrupt. We just missed the first part of that sentence. So which bond were you referring to?
So the long-term US government bond,
Yeah.
30-year US
Yeah.
Treasury.
Okay.
I've seen a table of different down periods and the length of the declines, and this is pretty much one of the worst on both counts. And that includes when the British burnt down the first White House in 1812. So it's pretty extreme by any measure.
This is very topical because we've just been away and met up with some really wonderful Americans on the trip. So I'm sure they'll want to know all about that one. So there we are. Now, the EU, another thing that struck me when we were away, got into a taxi. And of course, taxi drivers have always got a lot to say about this, that, and the other.
Pretty useful.
And this guy said, we think Frexit might take place. It would appear that a lot of French people are fairly fed up with the EU, and it's an interesting situation because presumably they and Germany are the main props now.
Yeah, they always have been the core countries, and Europe as a whole has had very weak economic growth compared to America, even compared to Britain. They've really been hammered by the rise in energy prices. So and on top of that, we've got widespread immigration going on. So the countries at the forefront who are taking most people in are really under strain. Looking after vast numbers of people when they're already struggling to cater for their own populace. So it feels like a kind of breaking point somewhere. And it's I've never been that keen on the institution, but if you go back to when it all when things started to merge 20 plus years ago, the idea was to get the economies to align in terms of inflation and deficits, to have this almost like a warm-up event to make sure they were all aligned. And this convergence criteria was really a big fudge at the time, and all sorts of shenanigans went on to make the figures look right.
Yeah.
So it's like the start of a relay race. Everyone starts at the same point. they kind of, the field spreads out afterwards, and that's where we are now. And the weaker countries are suffering, and and this whole energy issue is seeing Germany firing up more coal power than ever before. And there's a real anti-nuclear theme as well, which I don't personally this year. So it just seems the EU seems schizophrenic at the moment.
Yes.
And
yeah. I mean,
it just feels like
if you take Poland and Hungary, there are problems with immigration because neither of those two countries are particularly keen on taking anybody in.
Yeah.
The EU are also saying that, I believe, with Poland, there's a problem over the rule of law. They've got 70 billion euros to actually distribute to try and boost the European economies, but it'll only be to the ones that put up their hands and say, I'm a good boy. And what really topped it from my point of view was I found out the other day that apparently the Germans are buying oil from India.
Oh, wow.
Not particularly famous for oil production.
Exactly.
So one has to ask oneself, bearing in mind India's buying oil from Russia.
Yeah, I was going to say,
are they circumventing the whole thing? Probably.
Well, yeah, it just makes a mockery. I mean, we know that the Saudis and Russians and all these so-called BRIC countries are spinning off into their own organization. So it's just a symptom of it. And I remember a few winters ago, the electric buses in Germany were breaking down, so they brought the old diesel ones back into action. So it's
it's all going too quickly, isn't it? Basically, in terms of trying to actually achieve the objective of decarbonisation, and
it's kind of, I call it net nonsense, because scientifically it's incredibly weak, and just by repeating the same argument again and again, and getting funded research to say this is the thing in science, you can very rarely boil down one factor being directly related to another, one thing being proportional. So if you take weather, it's closer to chaos theory than A being proportional to B, or weather being proportional to carbon, which is carbon dioxide is a very small percentage of the atmospheric content anyway. So it's kind of a cult, and you just got to live with it, and people won't be dissuaded. And in the meantime, you can take advantage by holding energy companies, which are going to be needed more than ever.
Yeah. So buy Shell, buy BP. Yep, but we don't do investment advice here, so that doesn't
Oh, no.
apply. Um, Coming back to what you were saying earlier, the European Central Bank, it seems to me, impossible to control 27 different economies, and who knows?
Yeah, I mean, the main issue was that from the outset, there's a lack of faith between European governments. So that's why you don't have a common bond market.
Mm.
So for different countries, you get, so for weaker countries, get higher yields than Germany.
Yeah.
And it kind of misses the whole point of having a unified economic system. Either unified tax rates and bond markets, or it's always going to be a fudge or
Yeah. It's all about, I don't know, trying to control 27 different cultures.
yeah, exactly. And that's not quite the problem that Americans had when they did this, a couple hundred years ago. I mean, it also
Well,
had a revolution in
yeah,
between.
that's right. They did it probably the right way from that point of view. Another question slightly pertaining to Europe is, why does the Swiss franc always rank highly given the size of the country?
It's yeah. I, mean, I used to work for a Swiss bank, and I have to really appreciate the Swiss culture. But if you flip back a couple hundred years after the Napoleonic Wars, the country had a famine and had another famine in the 1850s. So it really was a period of mass emigration of Swiss trying to get out to America. But they introduced their currency back in 1850. And since then, it become a byword for political stability and controlling debt. There was a time when they aligned with the euro, but that broke up, obviously. And there's a lot of criticism from outside about Swiss private banking and anonymity. But this came about because the Nazis brought about the Enabling Act in 1933.
Yeah.
And the idea was you had a number rather than a name attached to a bank account. And that's very important for people trying to flee Nazi Germany. And so it's ironic since then that this private banking has been under attack for decades now, when really it's there to protect human beings. So yeah, overall, the Swiss are very dependable, and the currency reflects that.
Yeah, yeah, and it's not subject to the sort of fluctuations we've seen with, say, sterling over the bonds.
Yeah, it's just when you have a hard currency, your bond markets are stable as well.
Yeah,
it is it's a currency to hold if you're that kind of size of wealth for client.
Yeah. Let's get on to commodities just for a sec. Oil and gas prices. What do you think is going to happen there?
Well, as I said before, the BRICS countries are reducing the output so they can keep a nice high price themselves. As I said before, the Saudis have stopped reinvesting back into US government bonds. So that's not great for America. And overall, it's the countries with commodities who are effectively the countries of the future. And this is why these nations are spinning off. I mean, they're called emerging economies, but they account for a large part of the world population and a ever bigger part of world GDP as well.
Yeah, yeah.
So it's this whichever way you want to spin it, the demand for fossil fuels is still going up. And I think I showed a chart last time that it's not until 2050 that you'll get any kind of impact on that demand from alternative energy sources. So it's a place to be, and these countries getting wealthier as the West gets more into debt.
Yeah,
and it's almost like it's a pivot point in history, because empires don't sort of die over days; they die over decades. You've got a gradual transition from west to east in terms of power, and when that happens, you'll find that the countries like America will get more aggressive internationally, trying to not going to give up their power lightly.
No, not at all. Because there was a time, I don't know, going back 5-10 years, where BRICS countries were the ones to invest in, weren't they? And then they got out of favor because, generally speaking, they're run by dictators.
That's right. There's also the tech. I remember doing a roadshow 30 years ago with my old firm on emerging markets. It's all very exciting at the time, and all demographics and reforms going on. But I think the inflationary side took off, and as you hinted, it's like a dictatorship element as well, which is a default approach. But the think the demographics are still there. It's just a question of whether these countries harness it, or people just get fed up and leave, like we're seeing at the moment.
As ever, in these uncertain times, gold seems to have done quite well.
It's been okay. I think I'm a non-exec director on a gold mining fund, and gold has an endless capacity to disappoint. Particularly the gold miners, they've had a torrid year. Gold itself has been okay, and in the past that's because it's been based in dollars, so it's been as good a way of holding dollars as any. But when interest rates go up, it tends to work against it. So it hasn't really responded that well to wars or inflation in the past. But I think there will be a turning point, because these BRICS countries are really hoovering up any gold they can find.
Yeah.
And there's some talk about them spinning off and creating a new global currency, which is gold backed. But I think it's early days yet, and that might come eventually.
What, to replace crypto?
Well, it might work in unison. Might become like a cryptocurrency, but with gold backing, which would be very, very powerful. So that would really be quite something, and that would be the springboard into the future for them. But for now, it's too confrontational with America. Rather than to wave a red flag and trying to bait them into a war, you're better off just standing back and being quiet and not buying the bonds, not buying the dollar, and let it decay by itself.
Interest rates, do you think they've peaked in the UK?
It looks that way. It looks like we've hit a plateau. Some people are referring to the tabletop mountain effect, where you've had a steep rise, long period of flat rates, and then an eventual fall. So it does look like they're staying where they are for longer. And people have referred to this as being the new normal, but really it's the old normal. 2008 effectively.
Yeah, very much so. And of course, it has an impact on the UK housing market, and presumably prices will adjust themselves in due course, but in the meantime, fall a bit. Yeah,
if you're looking at the buy-to-let, I heard a figure that half of all buy-to-let properties in London were up for sale, which is a bit of a shocker, because effectively landlords are now losing money just for
that's right,
the joy of leasing out to tenants, and there's lots of carry costs apart from the interest rate. So on the other hand, on the residential side, not involving landlords and the like, about a third of properties are mortgaged, and as we all know, the rates are being reset this year. I've got mine in February next year,
right? And
it's going to hurt. And there's been some programs on UK TV about people's mortgage costs tripling in a month, and it's really brutal.
That's hard,
particularly for younger people or those who were kind of breaking even anyway beforehand. And then yes, I think naturally it's going to be some contraction in house prices, but at the same time, there's a dire shortage, and successive governments have really failed to develop enough property building compared to the post-war period. It's puny.
How about inflation? Is that coming down?
I think again it's like the old normal, where central banks have a 2% target, but I don't think that's particularly likely, particularly with oil prices staying high. Even if you strip out oil prices, with the American inflation rate, that's very dependent upon the owner's equivalent rent, which is like all-in rental costs. So I think 3% are probably a reasonable figure, and interest rates will probably stay marginally above there. So if you do get a crisis or an issue, they can cut rates quickly. What you don't want is to have low inflation and low rates for the sake of it. They'd rather have something like dry powder to work on in a crisis.
Well, I think a lot of people would say the Bank of England got caught out by keeping the interest rates so low and not sort of seeing that interest rates have to go up eventually. And as a result of that, they left it too late, in my view.
And this has been a common theme among lots of central banks, that they kind of, when you hose an economy with money, not via banks, which doesn't work very well, but directly into people's pockets, then this big spurt in the money supply had an inflationary effect. On the flip side, the money supply is now on the wane, so that could have the opposite effect. And with all these things, you always get a reaction and overreaction, and
Yeah.
that's history, whether it's
It's a
financial.
pendulum, isn't it? It's like a
Yeah,
pendulum every
it
time.
just goes too far, and so probably have another recession first, then
Yeah.
get your rates cut. But in the meantime, yeah, inflation looks pretty sticky.
What are your views on HS2? This is the high-speed 2 train line, which was going to go up to Manchester, but is now being cut back, it seems, to Birmingham, and it's going to start at Old Oak Common, which is in the middle of nowhere in London.
Okay,
I mean, isn't this just typical in terms of the fact that government starts to panic and we suddenly find a situation where, something that appeared to be plausible just falls out of reality?
Yes, it's part of this cult of electrification, which is it's just a symptom of it. And as old saying goes, it's grim up north, and I can say that as a Scouser.
Yeah.
And the rail network and the infrastructure is pretty appalling between Birmingham, Manchester, Liverpool. They'd be better off investing in better stock and perhaps using less diesel because it's pretty mucky.
Yeah.
I think that the project was a bit of an overreach, and many governments have these white elephant projects that don't come to fruition. And ultimately, it doesn't really matter how many rail lines you build, they go on strike.
Yeah, well, that's true. That's true. We were going to talk about that in a moment. But on the assumption that, I mean, the answer is fully automatic trains, isn't it?
Yeah, but yeah,
like you used to do with your train set.
Yeah, I think if you look towards Japan and China for their rail systems are superb, absolutely incredible.
Yeah,
it just seems to
infrastructure very cool. I think it said that if they just go to Birmingham, you save about 10 minutes, 15 minutes. Is it worth all those billions?
Exactly. I'd rather have, of course, that the cars and fining people is a big cash cow as well. So it's it's just, I just find the UK very frustrating as a place.
Yeah. We're looking also at industrial action, which seems to just go on and on and on, and doesn't really get anywhere.
It's just as bad in America, then, to be fair.
Yeah. Okay. Well, that answers that one, doesn't it? And in actual fact, having met up with these American folk, there are a lot of parallels in terms of what's happening there compared with what's happening in the UK. What about Metro Bank, Toby? Challenger Bank that obviously didn't do too well.
Yeah, it's the first official challenger bank in about 100 years, apparently. And they've had to look for some refinancing because apparently the official story is there's an accounting error with their loan book. But I think ultimately all banks are now, exactly. All banks are struggling because there's bond market problem we spoke about earlier.
Yeah.
When you hold your reserves or your kind of cushion in government bonds, which are meant to be safe, then they get whacked. Then your bank's going to struggle. So apparently there's a Colombian billionaire who's looking to invest. I think he's an existing holder,
right?
But I'm not sure what the regulators will think if you have a non-financial person getting involved in a bank because they've learned the lessons of from California. When you don't get bankers involved in a bank board, then things can go wrong pretty badly. So, your best of luck to them. I hope they do come through because it's so hard to open bank accounts.
Yeah,
in the Channel Islands particularly, that
it's crazy
that someone will do this.
Let's get on to governments raising taxes. I see that Guernsey apparently have got a larger deficit than they thought they'd got.
Yeah, it's kind of you keep hearing this this deficit scaremongering, and all kind of figures are coming through. So I think the chief minister put up a Facebook post about asking questions, and one of the questions I put was about whether you got pension deficits included in this. And someone else answered it saying it wasn't, because I think you've got about $1 billion deficit in pension schemes based on the past actuarial valuations. But now that bond yields and interest rates have gone up, these deficits are really being reduced in a big way. So one of the politicians was talking about having a pension holiday for the state's pension scheme, which I know it's they've tended to not work in the past, but I think this could have some legs in saving money, because with the governments, the emphasis is always on getting more tax rather than saving money or promoting growth or deregulating. I mean, this is what, why Margaret Thatcher was such a leading figure at the time. All those economists saying, you can't cut taxes and grow the economy and all that, and she proved you can.
Yeah.
But economic growth doesn't automatically feed into higher taxes, because you've got to depend on employers to pay more, because you don't have corporation tax. So perhaps some corporation tax would be welcome. After the 010 was introduced some time ago, which lost a lot of money.
Well, I've never understood the logic of 010. I know it was supposed to be there to sweeten the financial companies that operate in Guernsey and Jersey and the Isle of Man. I mean, they're in it as well, aren't they? But I just don't get it. It seems to me that it's much better to go for, say, 10 or 15% as a flat rate of corporation tax and take it from there, because it's tremendously difficult from the accounting point of view, where you sort of historically you've paid some at 20%, you've paid some at 10%, and you paid some at 0%. So if you're going to declare a dividend, the accountant's working overtime to try and get it sorted. It's quite daft, I think. And well, do you honestly think a whole load of financial companies would quit Guernsey if they had to pay, say, 15%, given the fact that that's now supposed to be the norm worldwide, isn't it?
Yeah, I mean, this thing is, it's the having a 0% tax rate isn't the kind of the flavour of the month internationally. You'd be better off having something rather than nothing.
Yeah.
And if firms are just here for zero tax, it just seems quite superficial anyway. But if you look at our like fund administration, that's a pretty big industry in the finance terms. And I know a lot of law firms are very resistant to paying any more taxes.
But they would be, wouldn't they?
I think it's only fair that there's some corporate element to it. And the old argument is that they pay taxes through payroll. And that's just I think it's a nonsense argument. Really.
Yeah. It's one that's sort of run its course, hasn't it, in terms of plausibility? But
it's a pat excuse. So, yeah. But ultimately, it's got to be a two-way thing of some cut back in the waste, and I mean the wages are spectacular for some civil servants. Not all, a lot of them do a very good job, but I think Jersey is probably a case in point. It just seems to be so extreme.
Yeah,
and people like me who've got decades of experience and lots of qualifications might be earning half of what a civil servant earns.
And
not a tippy or anything like that.
And I doubt very much whether you've got a gold backed pension to go with it.
Definitely not.
So it is a bit of a crazy situation. Mr. Zoom has put on the warning light here. So what are your hopes for the next 3 months in terms of markets and assets and everything else?
I'm unusually positive, probably the most positive I've been in 2 years, which is a tough thing to say after clients have been struggling so much. Really, the two things triggered it for me last week was that you had the American payroll figures coming through stronger than expected, and the market didn't react. Then you had the events in Israel over the weekend, and the market went up. And that tells you that when you get this sort of negative news and the market isn't affected, that you kind of hit the bottom. And there's so much, everyone who's going to sell has sold, and resilience is there. You've also got the fear and greed index, which is like a 7-point measure of financial worries. When this gets to extreme levels, it's a good buying opportunity as well. So we had that last week, and now that's moving into a more positive territory. But I think historically, over the last 70 years, the American markets have been up in the fourth quarter, about 80% of the time, roughly. And that's especially so after a poor August and September, which we had. So I think the stars are very much aligned for a good end to the year. And that's not being like a flag waving stockbroker trying to talk things up and keep clients off your back. It's just a genuine feeling that this is pretty much it now, and it's time for a good old fashioned bull market.
Right. Well, with that, we'll keep everything crossed. Hope it all comes to pass, and take this opportunity, Toby, of thanking you very, very much. And I suppose I should wish you, on behalf of the viewers, a happy Christmas,
Oh
because
yeah,
we
of
won't
course,
be
yeah.
talking again until January.
Yeah, because apparently shops have got Christmas goods in them now. So when the carols start, you know it's the end game.
Yeah, yeah. Right. Well, really good. Take care.
Thanks for the questions. Cheers, Tony.
Cheers.
Bye.